Good evening from Indonesia. The Honorable Dr. Cheng Hoon as Assistant Director in the Asia Pacific Department of the International Monetary Fund. The Honorable Dr. Muhammad Edhie Purnawan as a Chairman of BSBI, Board of Advisors, Kadin Indonesia, and the Chairman of Indonesian Economists Association, International Affairs. The Honorable, the Dean of the Faculty of Economics and Business, Universitas Gadjah Mada, Professor Dr. Didi Achjari, as well as the Dean of the Faculty of Economics and Business, Universitas Indonesia, Dr. Teguh Dartanto. Respective moderator and all the participants, welcome to the International Lecture Series, Lecture 2, Global Economic Prospect and the Implication for Economics in the Region and Indonesia. This International Lecture Series is a monthly webinar held by the Indonesian Economists Association in collaboration with the Faculty of Economic and Business, Universitas Gadjah Mada, the Faculty of Economics and Business, Universitas Indonesia, the Alumni Family of Faculty of Economics and Business, Universitas Gadjah Mada, or KAFEGAMA, and the Alumni Association of Universitas Indonesia, or ILUNI UI. And this webinar will also facilitate open discussion and networking among scholars and policymakers. Next, we move forward to the next agenda that will be an opening remark as well as the opening of today's webinar by the Dean of the Faculty of Economics and Business, Universitas Gadjah Mada, to Professor Dr. Didi Achjari, M.Com, aka CA. The time is yours.
Thank you, Mbak Reyneta. Good evening in Jakarta and morning in US, ladies and gentlemen. The Honorable Dr. Cheng Hoon Lim, as Assistant Director in the Asia Pacific Department of the International Monetary Fund, the Honorable Mr. Muhammad Edhie Purnawan, as the Chairman of Bank Indonesia Supervisory Board, the Honorable Dr. Teguh Dartanto, the Dean of the Faculty of Economics and Business, Universitas Gadjah Mada, Universitas Indonesia, and our beloved student from both the Faculty of Economics and Business, Universitas Gadjah Mada, and Faculty of Economics and Business, Universitas Indonesia, and also all general public. Thank you to each and every one of you for being here virtually this evening in Jakarta time and this morning in Eastern Standard Time. We appreciate your enthusiasm, energy. We are honored to be the host of the second lecture in the International Lecture Series, a collaboration between the Indonesian Economists Association, or ISEI, and the Faculty of Economics and Business, Universitas Gadjah Mada, the Faculty of Business, Universitas Indonesia, and the Alumni Association of Faculty of Economics and Business, Universitas Gadjah Mada, or KAFEGAMA, and the Alumni Association of Universitas Indonesia, or ILUNI. We do wish that we can host a similar session in the near future in our campus, Universitas Gadjah Mada, in the cultural city of Yogyakarta. We will certainly be honored to invite and have you, Dr. Cheng Hoon Lim, in one of our events in the future. For now, thank you very much, Dr. Cheng Hoon, for joining us virtually and for giving us out of the lecture. Honorable guests, we are now living in a period of great uncertainty. At the end of last year, we were quite buoyant with the optimistic forecast of the global economy and regional economy in the 2022 as the COVID-19 pandemic began to subside. Economic growth was projected to reach 4.9% in 2022. Economic indicators were beginning to pick up as manufacturing and trade pick up the pace. However, the resurgence of the COVID-19 pandemic due to the Omicron variant and the conflict between Russia and Ukraine puts a significant pressure on the global economy. The project of the global economy has been slashed to just 3.9%. The supply disruption due to the prolonged COVID-19 pandemic and more recently the war and the inflation. The concern of the modern era famine looms large. Indonesia and other countries in the region is in a quite vulnerable position given the potential rise in global commodity price and the depreciation of our currencies. Not only this will add to the inflation, but also put a lot of pressure on the government budget, as our subsidies are quite sensitive to commodity price and exchange rates. We should be vigilant on the impact of the current development and prepare adequate responses to the individuals who will be affected the most. Setting aside current challenge, we should also think and discuss about the long-term consequences induced by the COVID-19 pandemic. We should think about a measure to fight the multidimensional inequality. We should also think about the structural reforms can be made during this era of uncertainty so that we will be stronger when the economy returns to its pre-pandemic pace. The lecture from Dr. Cheng Hoon Lim will provide us insights on the challenge at hand in the finer details. These insights can and will inspire academia to generate inquiries for their research and will inspire policymakers to prepare adequate policy responses. Before I close the remark, I would like to thank our colleagues and staff from the Faculty of Economics and Business Universitas Gadjah Mada for their effort to preparing this session. Ladies and gentlemen, once again, thank you very much for attending this webinar. Be inspired to inspire. Thank you. Wassalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh. Thank you very much for the remarks, Professor Dr. Didi Achjari. And move to the next agenda, we would be hearing the keynote speech from Dr. Muhammad Edhie Purnawan as the chairman of BSBI, Board of Advisors, Kadin Indonesia, and the chairman of Indonesian Economics Association, International Affairs. To Dr. Muhammad Edhie Purnawan, the time is yours.
Thank you very much. Assalamualaikum warahmatullahi wabarakatuh. Dear ladies and gentlemen, especially Dr. Cheng Hoon from IMF, the Assistant Director, Asia Pacific Department, International Monetary Fund in Washington. Good morning for you, and good evening for the two deans. First is the host, Professor Didi Achjari, Dean of Faculty of Economics and Business, Universitas Gadjah Mada, and Dr. Teguh Dartanto is the Dean of the Faculty of Economics and Business, Universitas Indonesia. And also thanks to Moderator, Ms. Dian Agustina, the economist from the World Bank in the Governance Unit, and also she is at the ISEI International Affairs. And dear ladies and gentlemen, first of all, I would like to reiterate what is already said by the host, Professor Didi Achjari. As you already know that we knew that the war it set back the recovery. The war in Ukraine has triggered a costly humanitarian crisis that demand a peaceful resolution. But at the same time, the economic damage from the conflict will contribute and is contributing to a significant slowdown in the global growth in the year 2020 and add to the most dangerous variables in 2022, I think, is the inflation. Fuel and food prices have increased rapidly, hitting the vulnerable population in low-income countries at the hardest. Global growth is projected, as mentioned by the Dean, but in 2021, it was estimated 6.1% and slowing down to 3.6% in the year 2022. According to the IMF, this is about 0.8 and 0.2 percentage point lower to 2022 and 2023, rather than we projected in January, if I'm mistaken. Ms. Cheng Hoon Lim may explore about that one. Beyond 2023, the global growth is forecasted to decline to about 3.3% over the medium term. And we know that the war induced commodity prices and also energy prices increases and broadening prices pressure have led to 2022 inflation projection of 5.7% in advanced economies, 8.7% in emerging economies and development economies. It creates some other problems. Some of the countries already have inflation at more than 100%. For Sudan, it reached previously about 260%. Turkey is 70% or more, 73%, and many others, Brazil, including Ukraine and Russia, I think it's skyrocketing. Then the multilateral efforts to respond to the humanitarian crisis, preventing further economic fragmentation, maintaining global liquidity, and manage debt crisis, tackle climate change, and the pandemic era are very essential. In the meantime, for Indonesian economy, the World Bank projected the Indonesian economy to grow 5.1% in the year 2022 and 5.3% in the year 2023, as the pressures of deterioration of the global economic condition and also the higher inflation and tightening external finance begin to weigh. The risk to the outlook are titled to the downside. The Indonesian growth momentum in 2021 carried into early 2022 with the economic growth at about 5% in the first quarter, year on year, according to the report, Financial Deepening for Stronger Growth and Sustainable Recovery. Then the pickup in domestic demand since the end of the last year provided relief to the private sector, especially medium, small, and micro enterprises that suffer very much during the pandemic. The domestic recovery also enables some fiscal consolidation, while monetary policy has remained appropriately accommodative. This condition has enabled a pickup in bank lending in support for the recovery. But after that, we know that Russian invasion to Ukraine has compounded the pandemic-related challenges. The commodity prices have risen sharply and are expected to remain high until the year 2023, while Indonesia benefited in the short run from a windfall in commodity price earnings. Prices have started to rise and foreign financing have become tighter, but domestically, Indonesia has a combination of the windfalls and as well as subsidy to some of the state-owned enterprises. And this has intensified the policy changes associated with the rising energy subsidy and created headwinds for monetary policy. Indonesia economic growth following the pandemic comes amid an increasingly challenging global environment. Now it is important to sustain and endure a structural policy reform to support economic growth and to reduce reliance on near-term macroeconomic stimulus. While energy subsidy may help contain the price in the short run, the case for the subsidy reform remains still very strong. Having an exit plan to shift from providing blanket benefits toward more targeted support for the poor and vulnerable will be very much important now. And in addition, a stable and smooth functioning of financial system, I think, is the key for the recovery, especially after the COVID-19 crisis, and Indonesia is It's almost done for this, but now it's a little bit increasing in the virus. And longer economic growth, including through the expansion of the investment in services, especially such as healthcare and education, are also very important. And as such, although the Indonesian financial sector has proved to be resilient during the pandemic, further efforts to overcome structural constraints and reforms will, I think, accelerate inclusive, sustainable, and greener economic growth. And targeted reforms can make the financial sector deepening, more efficient, and more resilient. Then the three areas of the reforms in the Indonesian financial crisis will be: the first is increasing the demand and supply of finance by expanding access to the usage of financial services, and also broadening and improving the quality of financial market products and mobilizing a long-term saving. And the second is to improve the allocation of resources by promoting competition in the banking sectors and strengthening the insolvency framework, and also enhancing the consumer protection. And the third is strengthening the capacity of the financial system to withstand shock by improving the effectiveness of financial sector oversight. And among the proposed responses by Indonesia to the high tension problems is to reshoring production, and to enact industrial policy to increase country capacity to produce. And these days, when everyone seems to be working with the background of the world without borders, yeah, and suddenly everyone recognized that at least some national borders are the key to economic development and security. Then the new policy proposal of some of the countries, including Indonesia, implies that the long-standing rules of the international trading system will certainly, at this time, is broken, unable to reconcile the reshoring production with the principle of free and non-discriminatory trade. Most of the business and political leaders now is advocating. And there was a little soul searching about how and why things had gone so wrong, or about the flawed, hyper-optimistic reasoning that prevailed during the recent economic development today. And a bit more, the global market economy has shown a lack of resilience. We essentially built something like cars without something like analogically without spare tires, knocking a few dollars off the price today while paying little mind to the future expectation. Then the system of something like just-in-time inventory system, which is marvelous innovation as long as the economy faced only a minor perturbation, but they were a disaster in the face of COVID-19 and also the high political tension amongst nations, and now China and Taiwan after the Ukraine and Russia, creating a supply shortage cascade. In all, the global economy grew slower than expected. Today, Bank Indonesia mentioned that the current account will be on surplus in second quarter 2022, whilst the full year of the current account deficit will be only 0.5% to 1.3% of the gross domestic product. And also the recent development of the rupiah towards the US dollars is a bit depreciated, but it is just a little bit conformable to the peer countries and caused mainly by the monetary policy normalization globally, especially in the United States of America. But onshore US dollar supply is ample, according to Bank Indonesia. all of the economic institution in Indonesia is more optimistic now on its expectation on growth at about 4.5% until 5.3% in the full year 2022. But inflation will remain a bit above the upper range target. According to Bank Indonesia, it will be 4.2%, but it is still okay compared to some other countries, which is the inflation are skyrocketing. Overall, the stable and smooth functioning of the financial sector, I think, is the key after we finish the COVID-19 and also long-term sustainable growth for Indonesia, as well as equipping more to the structural real productivity transformation is very essential. Just to quote Herbert Hoover, for today's development, the most essential factor of economic recovery is the especially restoration of the confidence. I thank you very much. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh. All right, thank you very much for the speech to Dr. Muhammad Edhie Purnawan. Now we would be hearing the presentation of Dr. Cheng Hoon Lim as Assistant Director in the Asia Pacific Department of the International Monetary Fund. But before that, let me introduce you to our great moderator today that will be guide you to the further agenda. To Ms. Dian as the Economist Governance Unit, the World Bank, as well as a part of Indonesian Economists Association, ISEI, International Affairs, the time is yours.
Assalamualaikum warahmatullahi wabarakatuh. Good evening, good morning, everyone. Good evening, Pak Didi, the Dean of Faculty of Economics and Business, University of Gadjah Mada. Pak Teguh, the Dean of Faculty of Economics and Business, University of Indonesia. Pak Edhie, the Chairman of ISEI International Affairs, and also good morning to Dr. Cheng Hoon Lim, the Assistant Director of Asia Pacific from the IMF. Before we start the lecture and discussion session, please allow me to introduce myself. My name is Dian Agustina. I'm a team member of PP ISEI International Affairs Division, and I'm very pleased to moderate our discussion session on the second ISEI International Lecture Series this evening. This evening, we will have our eminent speaker, Dr. Cheng Hoon Lim, to deliver her presentation on global economic prospects and the implication for economies in the region and Indonesia. Just a few words on Dr. Cheng Hoon Lim. Dr. Lim is currently an Assistant Director in the Asia Pacific Department of the IMF. She is the Chief Asian 4 Division Indonesia and Philippines and co-lead regional work on climate change and green financing. Dr. Lim has extensive experience in financial and capital markets, as well as in macro-financial surveillance of advanced and emerging economies, and on the effectiveness of macro-prudential policy instruments in mitigating systemic risks. She has also contributed to several publications, including as a co-editor of the Future Asian Finance and Financial Sector Reform in Transition Economies. Dr. Lim holds a BA magna cum laude in economics from Smith College, USA, M.Phil with distinction on economics from Cambridge, and received her Ph.D. also from Cambridge University in 1994. So just before we start, and I invite Dr. Lim to present, I would like to remind everyone, if you have any questions during the presentation or after, please do post it in the Q&A box icon, not the chat box, the Q&A box in the Zoom by providing your name and institution, and we will do the discussion after the presentation. So, okay, without further ado, I would like to invite Dr. Cheng Hoon Lim to share her presentation. Dr. Lim, please, the floor is yours.
Thank you very much for your kind words of introduction. Let me now just share the screen so we can see my presentation slides. Hopefully everyone can see this.
Yes, clearly.
Yes, we can see.
Would help if I start on page 1. Okay, so I am delighted to be here this evening to speak to you about the challenges facing the global economy. But before I do that, let me also convey my greetings to my fellow panelists, the Honorable Dr. Edhie Purnawan, the Honorable Dean Didi Achjari and the Honorable Dean Teguh Dartanto. As I said, I am very honored to be speaking with you this evening. And at a time where global and regional economic outlook are facing very difficult policy trade-offs. So let me start off, let me just show you the agenda that I will follow. I'll present the challenges and then I'll talk about the implications for Asia. And I will end with some discussion about risks to the global and regional outlook. Okay, so the pandemic is not over. It's still with us. It's still lingering. Cases have improved. Case counts, for example, have declined. You can see here from the first chart. It has declined and passed their peaks, except for a few countries that are currently suffering their first big waves of infection since 2020. These are China in the green line. You can see New Zealand and Korea. Now, some countries like Indonesia are moving towards treating COVID-19 as an endemic disease. So for many countries, the peaks of the pandemic have passed. Mobility has returned. On this right-hand chart, you can see mobility has returned to pre-pandemic levels, pre-pandemic levels. The Omicron variant in early 2022 had only a moderate drag on mobility. You can see the chart, it didn't fall as much as it did in the first phase of the pandemic. And this is because, like in Indonesia, there was steady progress in vaccinations, health systems were more resilient, and the Omicron variant had a milder effect than during the previous Delta variant waves. So the result has been a strong first quarter growth across much of Asia, driven by manufacturing and a rebound in trade. And we saw that in Indonesia as well, where first quarter growth exceeded market expectations at 5% year on year. So, however, in an important country in the region, China, imposed strict local lockdowns because of a new outbreak of COVID-19 in April and May. And this had an immediate impact on Chinese activity. You can see from this slide on the left here that investment, and it was very broad-based, investment in infrastructure, manufacturing, and real estate, which is the screen line, all declined in April. Retail sales also declined in the middle chart by 11%. And we saw PMI, especially in services, fell into the contractionary phase, the contractionary phase meaning below the 50 line. And services, as you know, is a high contact intensive sector. And the lockdown triggered a very sharp decline in PMI manufacturing. And this is important because this will have implications for growth, for the growth outlook in the region. Now, as the world grapples with the lingering effects of the pandemic, as our earlier panelists had said, there was a second shock, and that second shock is seismic. The Russian-Ukraine war is a significant further setback to global recovery prospects. Supply disruptions have been exacerbated by the war, and that has affected trade flows. It has affected remittances, and financial conditions globally have tightened because investors' global risk appetite by investors have declined. There's greater uncertainty. People are not willing to invest. Now, not surprisingly, the strongest impact is being felt in Europe, where the invasion has led to a refugee crisis for countries close to the Russia-Ukraine border, such as Poland, Moldova, Hungary, and Romania. So sanctions imposed on Russia, including the cutoff of about 90% of oil imports, is expected to result in a sharp contraction of Russia's GDP. Here in the bar, you can see it's expected to fall by about close to 15%, and Ukraine is expected to contract by more than 35%. The war is also causing a risk of geoeconomic fragmentation, and this will pose significant challenges to economic and geopolitical trading blocks in the world. The war has made a bad situation in terms of inflation even worse. Right? Before the war, supply chain disruptions, a significant increase in demand for goods, and as Dr. Edhie said earlier, the supply chains were significantly disrupted as a result. The war has now fueled another surge in commodity prices and inflation. So you could see here, some of the commodities here in terms of the average petroleum spot price, in terms of gas and wheat prices. I don't show rice prices here, but rice prices have also increased quite a bit recently. And wheat, of course, is important for Indonesia that consumes noodles. Median inflation on the right-hand chart, you can see in the United States, it has increased by 8% year on year, which is unprecedented in the last decade or so. In Latin America, it has also increased very sharply. I was the mission chief for Brazil until recently, late last year. And in Brazil, inflation was a significant problem, which prompted the central bank to sharply increase interest rates. In emerging Asia, and that includes Indonesia, inflation is rising, but it hasn't risen to the extent that the other countries have experienced. And there are reasons for that, which I can go into later if there are questions about that. But for now, let me move on to the next slide to show that, as inflation spikes in US and Europe and other countries around the world, monetary policy is being tightened more aggressively. I already mentioned Brazil. There are other countries, emerging markets that have tightened, including in the region. We just saw the Philippines announce another 25 basis point hike this morning on top of the 25 basis point hike last month. So monetary policy is being tightened more aggressively, and that's because households' purchasing power are being eroded. And this is especially felt by lower income and poorer households, where food and fuel form 2/3 of their consumption basket. So the US Fed, this chart actually in the middle here is actually outdated already. Markets have actually shifted their expectations of the federal funds rate to a higher level. I think the terminal rate now is reaching close to 4%. And that is the result of the US Fed raising the Fed funds rate by 75 basis points this month. And this was more aggressive than markets were expecting. And here on the right-hand chart, you can see that the market implied future rates have also increased in Europe in anticipation of the ECB increasing rates in July. So what does this all mean for the global economic growth prospects? So as our panelists have said earlier, global economic prospects have worsened significantly this year. Our global growth forecast for 2022, you can see here we are now projecting 3.6%, and this is a downgrade of 0.8% relative to our projection in January, and a downgrade of a further 0.5% compared to October 2021, when October was the last date last year when we released our real world economic outlook. So there have been consecutive downgrades in global growth. And this downgrade is seen across, you can see these negatives across the major economies in the world. So what are the implications for Asia, and what are the implications for Indonesia? So let me now turn to the main channels of transmission to the region. The spike in commodity and food prices will have an inflationary impact. In prices in Asia, emerging and developing economies are more sensitive. What our analysis shows here on the left-hand side chart, you can see that the emerging market economies in Asia tend to be more sensitive to food price shock. The immediate impact is sharper and higher than the oil price shock on inflation, which is this middle chart here. The oil price shock will also have an inflationary impact, but just a little bit less than 0.5 compared to, say, the immediate 6 months after the shock of about 0.5 percentage points. So now, what an important point to raise here is that prices in Asia have fuel prices and food prices in Asia tend to be administered. And the chart on the right shows the percentage of countries that have administered prices. And here, let me point to Indonesia. Inflation in Indonesia has risen to 3.6%, and this is above the midpoint of Bank Indonesia's target range, while core inflation has increased from 1.5% to 2.5%. Now, inflation in Indonesia has been more subdued compared to other countries in Asia, and that's because 18% of its CPI basket are administered prices, and administered prices have not been adjusted to reflect market prices. Is that, I mean, is that something we need to worry about? I think the positive is that inflation is contained, the impact on the poor and vulnerable are mitigated, but it will also mean that the fiscal bill will be higher because administered prices are kept low through energy subsidies. Can Indonesia afford paying more in terms of energy subsidies? Yes. I will show you in the next slide why that is the case. Because it is a commodity exporter, so it is getting a lot of revenues from exports of coal and exports of palm oil. So it can afford to provide for these energy subsidies. That the question, though, is if prices were allowed to adjust, the additional revenue that would be coming in could instead be spent on education or investment in infrastructure. So these are some of the policy trade-offs that could be considered in thinking about how subsidies could be used to contain inflation. So the second channel, as I said, in terms of the transmission from the global economy to the region, is terms of trade. And here we can see that most countries in Asia will have a negative terms of trade shock. And the impact on Asia will depend on whether they are importers of commodities or exporters of commodity. Strong oil importers such as Korea, Japan, China, and the Pacific Island countries will face a negative shock. But for countries in Asia that are commodity exporting countries like Australia, Indonesia, and Malaysia, this will be a favorable shock. And in Indonesia, we saw a large trade surplus. That means there were more exports than there are imports. A large trade surplus in March and April because, as I said, of the surge in prices of coal, nickel, and palm oil. So this is what I meant by Indonesia seeing increasing export revenues, that are important. Higher export revenues also mean higher tax revenues for the government, and this improves the budget in terms of tax revenue collection. And in this way, Indonesia can afford to pay for the energy subsidies. But there are trade-offs, as I've said earlier. Overall, on a net basis, the change in terms of trade is expected to have a drag on growth in Asia's emerging and developing economies. Now, the deterioration in the terms of trade are expected to weaken current account balances. And again, this is very much split along the lines of commodity exporters versus importers. And as you may guess, the lower income developing countries, the Pacific Islands, which are strong net importers of these commodities, are expected to see a large deterioration in their current account balances. In Indonesia, we're actually projecting a small current account surplus because of its positive terms of trade shock. Now, so what's happening in Europe and what's happening in China, that's what I will cover in the next 2 slides in terms of its implications for Asia. Obviously, lower external demand from Europe will reduce growth. And that effect will be felt across the board. So countries like Singapore, Hong Kong, some of the advanced economies, which have the green bars here, shows you the exposure to Europe. The direct exposure to Russia, which you can see is the small red bars here, are small. So Asia doesn't have a very large direct exposure to Russia, but it has exposure to Europe. But if Russia's economy is affected, Europe's economy will be affected. And that is where the channel of transmission comes to Asia. So in countries, Indonesia as exposure here is about value added exported to Europe is about slightly more than 2% of GDP. So it's not, it would not be as badly hit as some of the other countries in Asia, but it is not totally immune either. Tourism arrivals will also be affected, and countries like Maldives and Sri Lanka and Mongolia, in fact, actually has a lot of tourists, which I was a little bit surprised by, tourists from Russia, which is the red bar here. So tourism arrivals will also affect the region. And then you can see that spillovers from Europe is how we quantify here in percentage points, will be about 0.3 percentage points. Basically, that if growth in Russia declines by 1 percentage point, growth in advanced Asia will decline by 0.3 percentage points. This is what the red bars show. However, you look at this green bar here, for emerging countries in Asia, the main impact is not from Europe, but from within Asia, intra-regional trade. And that impact will be 0.6 percentage points. And the source of that is China, which is the next slide. The slowdown in China will have a much bigger impact on growth in emerging Asia than the growth slowdown in Europe. And that's because if you look at this left-hand side chart, emerging market Asia export volume, this green line, tends to follow China's import volume, right? What China imports is from emerging Asia. And if we see this red line here, that has sharply declined in April, because as I said, lockdowns in China had affected across the board their investment, their PMI, and other sectors of the economy. So we will anticipate this green line here to also come down going forward. And the expected value added destined for China in Indonesia, it's about 20% of GDP. And that's 10 times more than the value added for Europe, which was 2% of GDP in the chart, in the previous chart that I showed. So the China downturn will pose downside risks to Asia. It's a much bigger effect than in Europe. So overall, the growth prospects for Asia will be affected. Not as the decline will not be as big as for the rest of the world. We have a revision of minus 0.5 compared to minus 0.8 for the rest of the world, and minus 0.3 in the previous round of revision compared to minus 0.4 for the rest of the world. So we are projecting Asia to have a positive growth of 4.9%, with a lot of heterogeneity across countries in Asia. Relatively speaking, the ASEAN economies here are doing relatively well. And I have to say that for Indonesia, our Article 4 that was concluded in March this year, we're actually more optimistic than everybody else, including the government. We're actually projecting 5.4% growth in 2022, largely because of the significant trade surplus that Indonesia will benefit from the sharp increase in commodity prices. Now, there is considerable uncertainty around this outlook. Projections are very difficult to make in times of high uncertainty, and the downside risks are significant. What are some of them? Well, the escalation of the Russia-Ukraine conflict could lead to another round of increase in commodity prices. We already saw oil prices going up above $100 per barrel in the last month or so. It's come down a little bit, but if the conflict escalates, that could see prices going up. So far, the sanctions have not affected, the sanctions against Russia have not affected gas. Oil exports from Russia have been affected by the sanctions, but not gas. But if the sanctions are extended to Russian gas, this would mean a significant impact on inflation as well. And then inflation persistence. Can the monetary policy tightening that central banks around the world are undertaking, will that bring down inflation? How broad-based has inflation become? How entrenched in wages? Are we going to see a wage price spiral if central banks don't act fast enough and high enough in terms of the policy rate adjustment? Now, the pace of monetary policy normalization will have to be data dependent, because the higher the rate goes, the higher the recession risk. And this is a significant policy trade-off that many central banks around the world are facing, including Indonesia. Global financial conditions have already tightened because, as I said earlier, global risk appetite. Investors, when there's high uncertainty, people don't want to invest. Investors don't want to invest. There's capital outflows from EM. If global financial conditions were to further tighten, we could see more capital outflows from EMs. So far, capital outflows from Asia have been limited. Spreads have gone up, but capital outflows have largely been localized. I think it was Taiwan, India, and Korea. We haven't really seen outflows from the other countries. But if global financial conditions tighten, this could be a risk. Deeper slowdown in China, we see that Asia, emerging Asia in particular, is highly exposed to China, and a further slowdown would be negative for growth prospects. And of course, emergence of new COVID variants. We hope we are past the pandemic, but as the disease shows, it may still have a few surprises up its sleeve. And what we don't want is hopefully additional lockdowns, because if we do that and mobility declines again, we would have a negative impact on growth. And then, of course, climate change, natural disasters are an ever-present danger, including in Indonesia and especially in the Pacific Islands. So let me conclude with this last slide on policy priorities. As I've said before, there are difficult trade-offs. There's rising inflation, the recovery is still incomplete. Many countries are running out of fiscal space because they spent a lot of their fiscal space during the pandemic, but now they have to deal with the economy slowing down while global financial conditions are being tightened. So fiscal policy now has to be very targeted to deal with the rise in inflation. Cash transfers can be provided to mitigate the cost of living increases for the vulnerable. As much as possible, we would like to see countries avoid untargeted fuel subsidies. Monetary policy, I won't go through all of these. You can read them at your leisure. Monetary policy will have to tighten in order to make sure that inflation and inflation expectations don't become entrenched. This is very important and in some ways the Federal Reserve is trying to catch up to the rise in inflation. The speed of tightening will have to depend on incoming data, as we like to say, is data dependent. If inflation continues to exceed expectations, then the speed of tightening has to increase. If there is a risk that there is a recession and that inflation expectations are now becoming more anchored, then the speed of tightening can be slowed down. So it will have to be data dependent. And lastly, structural policies, given that fiscal space is now restricted because of the pandemic spending, monetary policy has to deal with inflation. A lot of the burden now has to fall on structural policies, like never before. We need structural policies to boost long-term growth. And here it will be important to pursue trade reforms, to invest in infrastructure, to invest in education. And that is critical because a lot of years of schooling have been lost because of the pandemic, and that cannot be, gotten back. So investment in human capital, product and labor market reforms, we still have output gaps. We still have to improve, increase labor force participation. We have to improve job training, job matching skills. All these will be important to boost structural reform. And Indonesia's Jobs and Labor Market Act will be critical in this respect. So let me stop here and I thank you very much. It's late in the evening in Jakarta. I thank you for your attention.
Thank you very much, Dr. Lim, for the very interesting presentation. I think it's very interesting to hear all the key challenges faced by the emerging markets and developing economies, and of course, particularly for Indonesia with the current global economic and political situation. I think all of us have also heard very clear policy priorities at the end, aligned with the current global situation. So now we can open the discussion, our Q&A session. Bapak, Ibu, students from the universities, all respected participants, I would like to invite you to post your questions in the Q&A chat box if you'd like to ask questions, so we can start the discussion. So perhaps, Dr. Lim, we can start one at a time, so it's easier for you to respond. Okay, at the moment, I don't see there is any question yet. So while the participants perhaps formulating the question, maybe I can start with asking a question to begin with, so to energize the other, that maybe it's already evening in Jakarta, so perhaps people are a bit tired, so I will start the questions perhaps. So it's very interesting to hear, you mentioned as well about the energy subsidies in the presentation. So I think it will be nice, great to hear more about this in light, from your perspective, Dr. Lim, in light with the Indonesia fiscal sustainability and potential increasing in the subsidy, and also with the sustained high commodity prices. What do you think about this fiscal sustainability for Indonesia, especially because this can be a burden for the government, the budget burden for the government, as they need also the budget for recovery and also for the fiscal consolidation in 2023. So maybe we can start with this hopefully intriguing discussion while we are reading also for the others.
It's a very good question, and it's a very good question to kick off the discussion. As I said earlier, it will be a burden for the government to provide for the energy subsidies, but they can afford it. Right now, we do not see a problem in terms of meeting the 3% deficit target that the government has set for itself to achieve by 2023. We see that as being achievable. We don't see a fiscal sustainability issue at the moment. What I wanted to highlight was that there is a policy trade-off to provide these energy subsidies, because in some sense, Indonesia is getting a positive terms of trade shock. It's a windfall gain, right? Prices have gone up a lot. It's getting all these revenues in. That revenues can also be invested to boost long-term growth. As I said in my last slide on structural priorities, it could be used to invest in education or training. If it was not used to subsidize energy prices. So there's an opportunity cost to providing energy subsidies. What we would like to see is prices adjust, to allow prices to adjust, because if prices go up, you will dampen demand, right? And if demand goes down, then the imbalance between demand and supply will correct itself. However, the government can provide targeted transfers to help the poor and to help the more vulnerable in society who cannot see cooking oil prices go up, who cannot see gasoline prices going up. The government can provide, and they have provided, cash transfers to these households to help them manage their consumption. I noted earlier that, poorer households tend to have a lot of their consumption in food and in gasoline. So it's important to help them. But we think that the government can do both. Let prices adjust and also help households.
Thank you very much. It's a very clear response answers, Dr. Lim. So, okay, so let's continue for the next question. So here we have a question from Mr. Priyanto Sudarsono. There is from the UGM alumni, University of Gadjah Mada alumni. So thank you for the very interesting presentation, Dr. Cheng Hoon Lim. His question is, the currency risk become the main factor further for investment to outflow from emerging markets rather than inflation? So the question is, the currency risk becoming the main factor further for investment to outflow for emerging markets rather than inflation? So that's the question. Please.
Yeah, I think so far we haven't seen exchange rates move a lot in Asia. We've seen the yen depreciate, and that is a reflection of the interest rate differential between Japan and other advanced economies. But there is a risk, right? And as I said in the last slide, the risk is if global financial conditions tighten further. If interest rates, what we call the dollar cycle, right? The dollar cycle is just beginning, meaning that the US monetary policy is just beginning on its tightening phase, right? So as US dollar interest rates continue to go up, the difference between the US dollar, the difference between the US interest rates and interest rates in Indonesia or other countries in Asia will become bigger and bigger. So that is what we call the differential in interest rates. If that goes up, then the currency risk, as you put it, will be bigger because the risk of capital outflows will be larger. So we need to watch this space and we need to be vigilant against that risk.
So I think just to follow up on that question, I mean, on that response, Dr. Lim, do you think Indonesia has already implemented the appropriate monetary policy to prevent the rupiah vulnerability?
It's actually remarkable how stable the rupiah has been. There was a slight depreciation recently, but to be honest with you, we were expecting an appreciation because of the very large trade surplus, which means that money, export revenues are actually coming in. But there are offsetting outflows in terms of services outflows and income outflows. So that has kept the exchange rate very stable. That has kept the rupiah very stable in Indonesia. I think if as I said, if the interest differential becomes larger, then there's a greater risk that investors will take the money out of Indonesia. But I would note that the share of foreign holdings of government bonds in Indonesia has actually declined by quite a lot. It used to be, I think, over 30%, and it's now less, around closer to like 18 or 20%. This means that, during the pandemic, a lot of money had already gone out. So in some sense, there's less money to go out now, right, by foreign investors. So there is a risk, but I think compared to say the 2013 taper tantrum, it probably would not be in that magnitude.
Okay, thank you very much. So yes, okay. So I think for the next, while we are waiting for our students to ask, maybe we can move to more general questions, maybe in terms of coordinations among the EMDs. So for instance, how do you think we should improve the multilateral coordinations and efforts among the emerging markets economies to address these global key challenges?
I think that's a critical issue. There are various forums in existence already that will allow countries in Asia and the rest of the world to come together. And I think these groups should exercise its convening power and get people to talk, get countries to agree on what is in their common interest, right? I think if countries see that they face the same challenges, they have common interest in enhancing trade, in improving collaboration, and cooperation, they will also want to be a part of it. In some ways, it's like, what's in it for me, right? So we need to, multilateral institutions need to bring countries together. These various forums need to bring countries together and say, this is in it for you. This is why it's important for us to talk and to agree. So I think that will be critical as we move forward, and countries, are thinking about what we call friendshoring, right? Which is bringing, instead of globalization, the trend, the discussion now is whether or not regional blocks might be more important, friendshoring as opposed to global shoring. Talking and listening to each other.
So it's also require more political coordination as well. Good political talking and communication.
And exactly, and you're absolutely right there. And also, I should mention that Indonesia holds the presidency of the G20.
Yes.
This year, and Indonesia will therefore play an important role, a critical role, a leadership role in ensuring multilateral coordination to solve these very tricky problems in the world: food security, debt, inflation, climate change, digitalization. All these, Indonesia will play a critical role as in its presidency of the G20.
Yes, thank you very much. Okay, there is another questions from our participants. This is about this climate or the business environment. So how is supposed to be the business environment face the current global economic condition that is currently ongoing? Do they have to be more aggressive in the business development, or should they stay in defiance, waiting for the economics condition to return to normal again? In your view, of course.
I think we need to be, I don't know if I would use the word aggressive, but I would say countries should employ active policies to improve the business environment and to improve the prospects for full employment and for growth. And active policies could include active fiscal policy, monetary policy, and importantly, active labor market policies. As I said earlier, it's important to help the labor market adjust. And we've seen the pandemic had a very significant impact on labor markets around the world. Labor force participation declined. And part of the problem that we've seen in inflation is because labor force participation declined by so much, there wasn't enough labor to do a lot of the work. So it's now gradually recovering, but we need to help train people to embrace the new digital job market, right? That's going to be important active policy that needs to be done. And we need to do the training should also not just be in terms of higher education, but also vocational training. So I think perhaps the short answer to your question is active policies. We should not passively sit, and let hope or pray for things to improve.
Okay, thank you very much, Dr. Lim. I think we can take a couple more of questions. So now the questions are coming. We have one from Pak Denny Hardiansyah. So he asked, what is the better solution for Asian countries, according to IMF, for facing the issues ahead, and also in relation to food security?
Yeah. So maybe I'll talk about food security first. I think what's important, when inflation went up, 22 countries, I think, around the world imposed something like 40 export restrictions on their commodity exports. That actually just helped to increase prices even further, right? When they put export restrictions on food or on commodities, it doesn't help inflation. And so we've encouraged countries to reconsider export restrictions, to lift export restrictions, to restore the supply-demand imbalances. Right now, there's too much demand and not enough supply. So if we lift export restrictions, we will improve the supply side of the equation. That, I think, will help food security. And I think what the IMF and other multilateral institutions trying to do also is to help some of the poorer countries in the world in terms of their ability to import food, to provide lending facilities so that they're able to address their food shortages. So I think these are some of the things that the IMF is doing on food security. And then all of the things that I mentioned on policy priorities, those are solutions or policy, not policy solution, but policy considerations that we hope countries in Asia would consider in order to mitigate the worst effects of inflation and to mitigate against stagflation, right? What is the worst outcome would be if inflation is high and output gap remains, meaning growth declines or growth is stagnant. Then we're in a difficult spot. So we need policies, active policies now to ensure that stagflation doesn't materialize.
Okay, thank you, Dr. Lim. I hope this answers your question, Pak Denny Hardiansyah. Another one is on what is the probability that United States will face a recession? If it does happen, how will it affect the emerging market economy, especially the economy and the financial sector in Indonesia? This question is from Ibu Irma Dewi, also a team member of the PPC International.
I don't think I can give you a probability that the US will face recession, but I can say that the probability, market probability has increased. Market probability, the market expectations of a recession in the US has increased just in the last few months. This will have a big impact. You see, if interest rates in the US go up because the economy is doing well, it's overheating, it's doing well, it will have an effect on emerging markets, but the effect is not as bad as if interest rates are high because inflation is high and the US is in recession. Then that's a double whammy, right? We get hit by the interest rate differential and we get hit again by the recession. So it is a double whammy that will be bad for emerging markets. And financial sector risks so far, again, have been limited because I do think that the 2008 global financial crisis actually led to a lot of regulatory reforms that strengthen the resilience of the financial sector. And that's true also in Indonesia. There's ample liquidity and ample capital. So I think the financial sector should be resilient, but regulators should always be vigilant about emerging financial stability risks.
Thank you, Dr. Lim. Ibu Irma, hopefully this answers your questions. I think we can take 2 more questions before we end the Q&A discussion. The first one is on how do you see the best approach of Indonesia as host of G20, especially concerning the food energy crisis, which not so impacted Indonesia other than cooking oil. So this is from Pak Haris Sampurno from PPC.
I'm not sure what is the question about the role for the G20.
Yeah, it's the role of Indonesia as the host of a G20 in regards in anticipating this food and energy crisis.
I think Indonesia has been playing and is playing a very important role here. As I said, it has the convening power of the presidency to get the major economies of the world together to come up with a solution to deal with food security, food shortages. I think what's important, and as well as the energy crisis, I think what I would highlight the resilience and sustainability trust that the IMF has recently set up that received the full support from the G20, and Indonesia had an important role as well in terms of garnering support to establish such a facility. And that will help poorer countries to be able to deal with the energy crisis in terms of their climate change impact going forward. So I think there's sometimes there's a lot of behind the scenes work that we don't see, but it is happening. And I think Indonesia is playing that important role in trying to come up with solutions for the challenges that we face. And they're not easy because, as I said, fiscal space in many countries are constrained. But we need to try, and we need to work together to address these problems. And Indonesia, it is fortunate. Indonesia has the presidency this year. It will be the first time, I think, that the 3 presidencies will be emerging markets. So last year was, this year will be Indonesia, and next year will be India. So at least the issues that are important to emerging markets will be kept at the forefront. And I think that's important so that the interest of emerging Asia and other emerging market countries will be addressed because they will be leading the presidency. Emerging market countries will be leading the presidency for the next 2 years.
Okay. Thank you very much, Dr. Lim. Another one is from the University of Indonesia, student from University of Indonesia, from Putu Ayu Puspita. So this is again related to the business environment. So her question is, she thinks the global condition, especially in the business section, is a bit difficult these days after the war in Russia happened. What do you think the country need to do to face this and help the companies to survive? Especially in terms with business that deals with export and import, because it seems that it's going to drag them, and even the COVID at the moment is not really going away yet.
Yeah, I think this is it's a very tough situation, especially for small and medium-sized enterprises where the balance sheet size is not as big to help them weather some of these challenges. I think companies that have lower leverage, meaning lower debt, will be able to cope better than countries with high debt or high leverage. And what will be important is, I think Dr. Edhie said earlier, ensure that there is good corporate restructuring framework, ensure that the bankruptcy procedures are transparent, are clear, so that if companies fail, there is a rapid workout solutions that can be reached, so that you don't have the corporate, the business environment is not bogged down by cases like zombie firms or firms that are no longer productive. So I think that will be important to ensure that there's transparency on workout procedures to resolve firms that are in trouble. This actually is good too, because when foreign investment, if you want to attract FDI or even local investment, if investors see that there are clear procedures to deal with firms that fail, they're more willing to invest. They're more willing to invest because they know that there's a mechanism in which they can get some of their money back if things don't work out, right? So improving that is going to be important for business environment, improving the regulation, reducing bureaucratic red tape, improving governance. All these issues are critical to improve the business environment.
Okay, I hope that answers your question, Ibu Mbak Putu Ayu Puspita. We have, do you mind to take another questions, Dr. Lim? Or
we can make it the last question, yes.
Okay, let's have a last question, yeah. Okay, this is from Pak Priyanto Sudarsono. With stagflation occurs in US and EU, do you think that Asian and emerging market economies, including Indonesia, can decouple from the economies and grow safely in this economic cycle? EM economies have suffered since tapering off, trade war, and pandemics. Please, Dr. Hoon.
I think the short answer is it's going to be difficult to decouple because in the charts I showed you, the export to Europe for some of the advanced economies in Asia are quite high, right? Indonesia is 2% of GDP, but for the other countries like Singapore and Korea and Japan and so on, they have quite high. Their exposure to Europe is high, and to the US. And if there is stagflation in the US, Europe, or if China slows down, I think it would be very difficult to decouple. I don't know if that answers the question, but I hope it does.
I hope that answers the questions. So yes, I think with the last answer from Dr. Lim, we end our Q&A and discussion session this evening. I would like to thank the speaker, Dr. Cheng Hoon Lim, for sharing the presentation with us. It has been a very fruitful discussions for me, and I'm sure for the participants. Thank you very much. And I also like to thank everyone that has participated in the discussion. So with this, I will give the floor back to MC. Thank you, Dr. Lim.
Thank you.
All right, thank you very much for Dr. Lim for the very interesting presentation. And thank you very much as well to Ms. Dian for guiding the webinar. I'm sure that all the participants get a super insightful presentation and broaden their knowledge. And next, we'll have a closing statement from the Vice Dean Academic, Research and Student Affairs of Faculty of Economic and Business, Universitas Indonesia, to Dr. Arief Wibowo, Lubis. The time is yours.
Thank you very much, Bu Reyneta, for the kind introduction. So, ladies and gentlemen, the Honorable Dr. Cheng Hoon Lim, Assistant Director, Asia Pacific Department, the International Monetary Fund, Dr. Muhammad Edhie Purnawan as the Chairman of ISEI International Division, Professor Didi Achjari, Dean of Faculty of Economics and Business, Universitas Gadjah Mada, distinguished fellow panelists, audience, ladies and gentlemen, good evening, good morning to Dr. Lim. Assalamualaikum warahmatullahi wabarakatuh. On behalf of Dr. Teguh Dartanto, the Dean of Faculty of Economics and Business, Universitas Indonesia, please allow me to extend my gratitude to Dr. Cheng Hoon Lim for delivering the talk on global economic prospects and the implication for economies in the region and Indonesia. We have learned from Dr. Lim that although there has been exceeded market expectation of the economic growth in the first quarter of 2022, we can see that there are some vulnerabilities in the economic recovery. The lockdown in China, for example, the increased tension between Russia and Ukraine led to a setback in the global recovery, including surge in commodity prices and inflation. It should be noted that the impact of these factors on emerging economies and developing economies like Indonesia is more significant, as we are more sensitive towards the shock through multiple channels. Aside from the lockdown and also Russia-Ukraine conflict, we can see that there are some additional risks to the outlook, and these include tighter global financial conditions, emergence of new COVID variants, and climate change risks such as natural disasters. Policy responses and anticipations, including fiscal and monetary policy, are imperative, and it is not straightforward as there are trade-offs in implementing the policy. I believe that in today's event, all of us have had insightful knowledge. The post-pandemic global economic post-pandemic global economic prospects and its implication for economies in the region and Indonesia. I would also like to extend my gratitude to the Faculty of Economics and Business, Universitas Gadjah Mada, and all of the organizing committee for hosting this second PPISEI International Lecture Series We hope that the next PPISEI International Lecture Series can be held offline, hopefully in our Depok campus at the University of Indonesia in the coming months. Thank you very much once again, and we look forward to seeing you all in the third PPISEI International Lecture Series. Assalamualaikum warahmatullahi wabarakatuh. I would like to give the floor back to the MC, Ibu Reyneta. Thank you very much.
All right, thank you very much to Dr. Arief Wibisono for the closing statement. All right, now we have reached the end of today's webinar for the International Lecture Series, Lecture 2, Global Economic Prospects and the Implication for Economics in the Region and Indonesia. I hope today's webinar will give you a great insight and broaden your knowledge as well. And on behalf of the committee, we would like to say thank you very much for attending this session. We also would like to apologize for any inconvenience during this session. Thank you very much, stay healthy, and we'll see you again on the third international lecture. Good evening.